All right, moving on. E-retail in India has experienced strong growth with an estimated value of $57 to $60 billion in 2023 and is now expected to scale beyond $160 billion in value by 2028. Now, this represents an annual addition of $8 to $12 billion since 2020. In fact, with online spending, which is currently only 5 to 6% of total retail spending in India versus 23 to 24% in the US and over 35% in China, the Indian e-retail market clearly has a massive headroom for growth. Now, these findings stem from the fourth edition of How India Shops Online, a report released by Bain Company in collaboration with Flipkart. And to take us through the key findings, joining me now is Manan Bhasin, partner at Bain Company. Manan, welcome to Startup Street. You know, in India, around 240 million shoppers would have bought something online in 2023. Adding to this, there remains significant headroom to grow, given that over 60% internet users in India are not yet shopping online. So what has been, and what will be the biggest game changer for the industry?
Thank you. So e-tail really has been a disruptive force in India's retail market. We expect this to continue growing at 25% over the next years. Typically, we've observed three trigger points which unlock e-retail penetration in any country. These tend to be digital access via affordable data, physical access in terms of wide reach and low-cost logistics, and the emergence of digital ecosystems. We've seen all of these play out in India in a material way over the last years. To give you an example, data prices have crashed 95% since 2015. The one trigger point that has not yet been fully realized is affluence. We typically see a material uptick in the spending per shopper once the GDP per capita for a country reaches about $4,000. India is straggling at about $2,500 right now. Okay. And as soon as this unlock is met over the next few years, we expect about 65 million households to come into the upper middle income brackets. And this is going to unlock a humongous amount of discretionary spending.
Absolutely. Manan, let's now talk about the business side. The merchant or seller ecosystem has also grown leaps and bounds, with twice as many sellers added last year compared to the previous years. And a majority of these new sellers come from tier 2+ cities. If you could talk to us about the dichotomy, buyers in top cities and sellers in small towns.
Look, there continues to be a myth that India's e-commerce is predominantly in top cities, right? So 7 in 10 shoppers today reside in tier 2 cities. What we find is an increasing number of these shoppers are actually coming from tier 3 cities. Tier 2 consumers have always had the affluence. They've always had the aspiration. The missing link has always been access. E-commerce bridges that. The seller ecosystem has grown leaps and bounds. One of the big things, in my opinion, is the logistics infrastructure, which has been developed both by e-commerce companies as well as the third-party logistics companies, right? This has been a great equalizer. Now you can very much imagine a seller producing something in Tirupur and then a consumer getting it in Mumbai the very next day. So in some senses, this dichotomy is overstated because the real advantage and beauty of e-commerce is the fact that it can actually normalize and equalize this.
Sure. Okay, let's now talk about the new business models that will emerge from this great e-commerce churn. There is Q-commerce, we've got live commerce, and there are other models that we've seen companies experiment with. So what happens next? Will AI be the game changer?
So look, 4 key business models, in my opinion, to keep an eye on. Quick commerce, fast fashion. You spoke about Snitch a little while earlier on this program. Inspiration-led commerce and hyper-value commerce. Now, each of these are at varying levels of maturity in India. Quick commerce, for example, is really beginning to find its feet with 40 to 50% of overall e-grocery spend coming from quick commerce. On the other hand, something like inspiration-led commerce is still at very nascent stages. I'm glad you asked me about generative AI because we are very, very bullish and very excited about the potential of generative AI. A series of high-impact use cases will emerge, which will help both consumers as well as sellers, as well as e-commerce companies. I'll give you one example, and Flipkart has really been the torchbearer of this in the Indian context by introducing live or conversational commerce via shopping assistants.
Yes.
Imagine I wanted to buy this jacket, and I can actually interact with somebody on the platform, which can give me very customized and tailored advice based on my shopping preferences and what I would like and my unique needs. This is just some of the nascent use cases, in my opinion, right? There's a ton that's happening around cataloging, around ad copywriting, etc. And the use cases will really mature over the many years to come.
Yes, Manan, but what about the money? What's the profitability roadmap? Where is the most promise? And, as this is a high cash burn sector.
Look, focus on profitability has been immense across e-commerce companies and more broadly across India internet, right? Like many of the marquee global companies that you think about, Pinduoduo in China, Shopee in Southeast Asia, Coupang in South Korea, all of these have turned EBITDA profitable over the last 2 years. And beyond kind of the scale benefits that you get on the gross margin line, e-tailers are also using 5 or 6 big monetization levers. Ad monetization is a big one. Seller services, another big one. Fintech, logistics and other externalization, and subscription services.
All right. Manan, very quickly, if you could answer my final question. We've been talking money. Retail media is the third big wave in digital after search and social across geographies. But retail media spends are only 15 to 20% of digital ad expenditure in India, compared to 25 or 30% in the US and almost 60% in China. So how does this pie grow, if you could answer that quickly?
Look, ad tech is more developed as far as monetization levers go in India. That said, there is the underlying digital ad dollars will itself go up, in my opinion. Today, the digital ad share as a percentage of the overall ad dollars in India is still significantly lower versus India. That's 30 to 35% versus 65% in the US. Simultaneously, what you'll see, e-retail itself on the spend or ad spend will increase because the coverage of brands and sellers will grow. And simultaneously, there are certain categories which will push more, or brand, for example, fashion, etc., will push even more, and that will grow the pie further.
Got it, Manan. Unfortunately, we've got no more time left, but many thanks for joining us on Startup Street and for taking us through the key findings of the report.
Thank you. My pleasure.
On that note, it's time for us to head into a short break, but coming up,